taking time out to be with us today and view this presentation. I'm Maina Rajani, and I work with the equity investment team at DSP BlackRock Investment Managers. I'm the co-fund manager of the DSP BlackRock Tax Saver Fund, and I'd like to spend some time with you today discussing the Tax Saver Fund. However, before we get into that, I'd also like to briefly introduce DSP BlackRock Investment Managers to you. The DSP Group is one of the oldest financial services firms in India today. It was a founding member of the Bombay Stock Exchange and commenced operations in the asset management business in 1997. BlackRock, incorporated in New York in the United States, is the world's largest asset management company with assets under management in excess of $3 trillion. Our total assets under management today is 27,000 crore, and our equity assets under management of this is 14,600 crore rupees. I'm also very happy to share with you today that DSP BlackRock Investment Managers has been voted the best equity fund house by Lipper for 5 years in a row and by CNBC CRISIL for 2 years in a row. The DSP BlackRock Tax Saver Fund was launched in January 2007 and today has a corpus in excess of 920 crore. It is a diversified equity fund launched under the Equity Linked Savings Scheme. Under this scheme, investors can get a tax deduction on their total investment as permitted under the Income Tax Act of 1961. Just like all ELSS schemes, the DSP BlackRock Tax Saver Fund has a 3-year lock-in period. This lock-in period actually enables the fund manager to take longer-term calls on the portfolio, and our fund strategy is devised around this. The strategy is both top-down and bottom-up in terms of its style, and we look for companies that show strong growth characteristics but are available at reasonable valuations. We look for mid-cap, small-cap, and micro-cap companies that are growing well and demonstrate that they can actually be leaders of tomorrow and can be sector leaders in the industries in which they operate. Currently, we have 60% large-cap stocks in the fund and 40% mid-cap, small-cap, and micro-cap. We look at both bottom-up and top-down investment styles to come up with company and stock ideas. We're currently positive on the consumer sector and on the pharmaceutical sector. The consumer sector has demonstrated strong volume growth in the past few years and continues to demonstrate strong volume growth. With rising aspirational levels, increasing disposable incomes, this sector will only continue to grow. The pharmaceutical sector will also benefit from the same things that the consumer sector is benefiting from. However, the pharmaceutical sector will also benefit from the export markets that they are currently looking at, with the generics that they export to these markets. We also like these two sectors because of the good corporate governance that these sectors demonstrate, the strong cash flows and healthy balance sheets that these companies have, and in most cases, the good dividend yield that we can expect from these companies. The sectors that we are currently underweight is the financial sector and the energy sector. As far as recent activities in the portfolio goes, we've increased the large cap weight in the portfolio to 60%, like I mentioned earlier. This is something that we could probably keep increasing over the next couple months. The other sector where we've increased weight is the metal sector. This is because of the restructuring story in certain companies that's playing out quite well, and also because of the global increase in non-ferrous metal prices that we are taking a bit of an advantage of. And finally, to conclude this presentation, I'd like to discuss with you the performance of the Tax Saver Fund, which for investors is obviously a critical decision-making tool when picking funds for investment purposes. The Tax Saver Fund since inception has given a return of 16.6%, and at the same time the S&P CNX 500, which is the benchmark index for the Tax Saver Fund, has given a return of 9%. The one-year return for the fund is close to 25%, and for the benchmark index, the CNX 500, it is about 15%. So as you can see, both the long-term and the near-term performance of the Tax Saver Fund has been stable and consistent. We certainly hope and endeavor to demonstrate such strong performance in the future, and we hope that as investors you'll stay with us for the long term. Thank you very much for your time, and I appreciate you viewing this presentation.
Mutual fund investments are subject to market risks. Read the scheme information document and statement of additional information carefully before investing.